All right, we're looking at stocks here, trying to catch a bid this morning. Let's keep talking sell-offs and dip buying opportunities. One of them has been in China as the trade starts to firm back up. Joining us, Thomas J. Hayes, Chairman and Managing Member at Great Hill Capital, and Mr. Tom White here with me in studio. Thomas, you're looking for dips to buy. The China dip had really been there the last year. Is it starting to come back?
No question about it, Oliver. Thanks for having me. We've been in BABA for almost 2 years now, and we are more investors than traders. So we've bought in the hundreds, and we bought a ton in the 60s. So our base is around $83. This is an absolute no-brainer. We look at intrinsic value, we think is well in excess of $200 per share. This is the #1 cloud provider in China. Obviously, you had the announcement yesterday that Apple is going to be using Alibaba's AI for Apple Intelligence, which was big news, but only part of the story here. Complete play on the middle class recovery with Taobao and Tmall as the 1.5 years of nonstop stimulus is starting to kick in the economy. International growing at 40%. So there are a lot of, if you play poker, Oliver, there are a lot of outs, a lot of things to love in Alibaba. And, it's had a huge move in the last few weeks. So probably consolidate for the next few weeks. But any weakness in the coming months is an opportunity to buy for the long term in our view.
Love me some outs, but I also like equity and getting my money in good. Is this a draw? You need something to come to fruition here? Or is the trade past 120 basically a breakout? Because that's a level that has rejected Alibaba time and time again, basically, 120.
Yeah, look, we were buying Alibaba before it was cool with David Tepper, and he put 37% of his portfolio in China. Certainly the 120 level has been a problem. Maybe we knock on the door again and don't get through for a few weeks, for a couple of months. Take that weakness, because once we get through, they're not going to let anyone in. This is going to go to intrinsic value. This is a theme. We've seen this theme since July of last year, broadening. What have we seen at the beginning of this year? Europe equities outperform U.S. equities. Equal weight have outperformed cap weight. Mag 7 earnings growth is decelerating. And guess what? China tech has outperformed U.S. tech by a wide margin this year. We believe that trend is going to continue. And what most people don't know is that's exactly what happened in Trump 1.0. Everyone thought Chinese stocks would do horribly. If you look from 2017 and 2018, one of the biggest runs in the shortest period of time in Alibaba, in Chinese tech, et cetera. So we really like the runway moving forward. Any consolidation next couple of months, great opportunity for the long term. Some of the parts, in our view, well over $200 a share.
Such a good point, too, on how China performed. We were hearing that from our own Jeff Kleintop, Tom, about international outperformance, both on the year and the way China traded in the first Trump term. You got a BABA trade. Tell me what you see in the options, Tom.
Yeah, well, they've got earnings next Thursday, so that's going to be a key point to take a look at. Maybe some weakness after the gains that we've seen so far this year, up 18% just in February. So it's had a great run already. So I looked at something a little bit more conservative in the option side, trying to take advantage of that higher implied volatility level that we're seeing in the shares after this run up and the earnings event. So going out to that February 21st monthly cycle, so just 9 days to expiration, I'm going to sell an out-of-the-money put vertical to take advantage of a neutral to bullish type stance here, where I'm going to sell the 110 strike put and then buy the 105 strike put. You want to stay risk-defying going into this event risk with earnings. $5 wide short neutral to bullish put vertical, collecting roughly about $1.30 credit on it. That's what you can make on $130. You've got about $370 in risk on that one, but it takes your break even all the way down to 108.70 to the downside. That's about 7% below the current share price. So you're giving yourself that cushion to the downside where you can profit in 3 out of 4 scenarios on this move. But this is a really short term, just a trade to take advantage of that higher implied volatility.
Okay. So there is still a good bit of volatility in here in the premium.
Yes.
Which, I mean, makes sense. This thing is moving fast.
Yep, and the earnings next Thursday. That's going to be key.
Okay. Man, 80 to 116 in a hurry this year for Alibaba. What a wild chart, by the way, that kind of U shape, almost a V from the October highs, and now back to them. Hey, Thomas, one other one you like here. I want to make sure I get your thoughts on. is PayPal, which has come off, and it's done it around earnings. Pretty big gap down on the last report. What'd you make of that, and does it concern you at all?
Yeah, same exact story. We've been in this one for a while, buying every single dip, basis $62. It ran right up to $90. Alex Chris is an unbelievable CEO. Came from Intuit. He's applied a lot of those same strategies. The reason the stock sold off on earnings was the market was upset that they feel that growth is slowing. It's not slowing. He's firing unprofitable customers because he wants to generate free cash flow and buy back stock. They did $6.8 billion of free cash flow in 2024. He's sandbagging again in 2025, setting expectations low, $6 to $7 billion of free cash flow. If last year is any prologue in terms of his sandbagging, they'll probably do $8 billion of free cash flow. Look, this is a $75 billion market cap. They just announced they're going to buy $15 billion worth of stock. They're going to buy in 20% of the company. They've got Venmo as a verb. They've got Fastlane Checkout that's doing phenomenal. This business is going to be great. Great leader, great turnaround story. It'll be back up to 90. We estimate intrinsic value up around 120. It may take a year to 2 years to get there. This is a high quality, durable, growing business that's generating cash like it's going out of style.
Convincing, and I like to hear it because my narrative on PayPal has been pretty similar. I was kind of confused why the stock was so hated for basically, 18 out of the last 24 months. So it seems like it has totally revamped the way we bank and the way we move money around. Thanks a lot, Thomas. Appreciate the conviction calls and the details there. And of course, a nice poker reference, always a good way to get on my good side. Tom, give me a PayPal trade.
Well, I know why the stock was down because their users across all their platforms was actually decelerating. But as Thomas mentioned, the new CEO, Alex Chris, is making some solid changes and good partnerships here. So I looked at something a little bit more aggressive here, but giving myself duration. The stock's pulled back about 11% so far this year after that poor earnings report. And it wasn't a bad report. It was just poor guidance and maybe some profit taking after that big run up. But I looked at something a little bit more aggressive, going out a couple months to the April monthly cycle. So you've got about 64 days till expiration on this one, where I'm going to buy the at the money 75 strike call. And then to offset some of the costs, because maybe it goes up, but maybe it just doesn't explode back to $90, sell the 85 strike call. So a bullish $10 wide call vertical to the upside. You're paying roughly about a $3.40 debit for that. So that's going to be your risk on that trade. Takes your break even up to $78.40 on this one. That's only about 4% above the current share price. So you don't need a monster move to the upside. You just expect over the next couple months that we're going to start making up some of those losses that we've seen post earnings on this one. But pretty straightforward. And because you're buying the vertical, Oliver, you have a little bit more flexibility as far as trade management. So if the stock does pop up towards, above $80 a share and this thing expands to maybe double, you can start taking off parts of your position or the entire position ahead of expiration. You don't have to wait for it because you're buying the vertical and it gives you some flexibility.
All right, buying a call vertical, buying upside, Baba, buying it in PayPal, and taking advantage of volatility where it's elevated. More elevated in Baba, it seems like. Okay, thanks for the trades.